So whole life insurance as your own private bank. It sounds risky, doesn't it? You might even be thinking, I mean, come on, who does that?
No, that's the worst idea I ever heard.
But wait just a minute. You're gonna wanna hear me out on this. You see, I've been in the infinite banking game for well over 6 years. It's actually been longer than that. And let me tell you something. I wish I had started it sooner. So today's video, I'm going to reveal a few familiar names that you've definitely heard of who have actually made the infinite banking concept work for them. But before we dive into that, I'd like to play a little game. It's called the hit the button game, right there. It's called the subscribe button. Hit it, yep, just hit it, just click a button, hit that subscribe button. And also while you're at it, hit the little alerts button up top. So let's get into some famous names that you've probably heard of. And we're gonna play Guess Who. So we're gonna play a little guessing game today. I'm gonna tell you some stories of some mystery people, and what you're gonna have to do is figure out who they are. This should be super fun. So here's how you could elaborate on each mystery person to make a selection. So let's start. Mystery person number one. So let's travel back in time to the 18th century. And I want you to imagine a family that wasn't just content with doing business in their hometown. Oh no, they certainly weren't. They stretched their ambitions out across borders, from London to Paris to Vienna and even Naples. They weren't merely bankers, they were their own banking system. And get this, during one of Europe's most turbulent times, the Napoleonic Wars, they practically financed the British government's efforts in that war. It was crazy. I mean, can you imagine that? It was like playing high stakes poker on a world stage and winning. So how'd they do it? Well, one of their secret weapons was leveraging their whole life insurance policies. You heard me right. They borrowed against these policies, thus creating the financial moat around their empire. It's exactly how they did it. This strategy has been passed down from generation to generation. And can you guess who they are? I'm waiting. Napoleonic Wars, 18th century. Oh, you got it. That's right. It's the Rothschilds, one of the wealthiest families in the world. Let's move on to mystery person number two. So for mystery person number two, we gotta fast forward a bit. We gotta go to 1980. So a woman in Chicago had a vision, but not a lot of capital. She was a bit stretched when it came to money, but she was certainly passionate about kitchenware, and she believed that she could turn this passion into a business. But how? She didn't want to go to the bank. Actually, the bank wouldn't have approved her. She didn't want to max out her credit cards because she knew that wasn't smart. Instead, she took a $3,000 loan from her whole life insurance policy. Today, that's equivalent to about $11,000 after inflation. Now, that small loan was a stepping stone to creating a company worth $900 million. It's the quintessential American dream. You turn 3,000 into 900 million? Come on, folks. Guess what? That was all fueled by smart financial planning. Do you know who this person was? Drum roll. It was the founder of Pampered Chef, Doris Christopher. So those of you that got it, great job. Let's move on to mystery person number three. So I want you to imagine when you're thinking about mystery person number three. Imagine being a high school dropout with big dreams, dreams so big that they could light up a whole country, literally. The individual started modestly, selling hay and grain, but then he made a pivot to the oil industry. So this individual, with a group of about 9 trustees, what he actually did is he monopolized the entire United States oil market by the 1800s. But you see, he didn't do it alone. Part of his strategy was to use whole life insurance to finance all of his business, avoiding the pitfalls of high interest rate loans from traditional banks. And by doing so, he built an empire, but he also shaped America's industrial landscape. And before I get to you guessing who this is, Today, this individual and this individual's family is known for this strategy. Any guesses? That's right, it was John D. Rockefeller. And that is also the Rockefeller family banking system. Literally one of the most quintessential names when it comes to privatized banking. Carrying on, mystery person number 4. So here's a character for you. This individual didn't actually start off in fast food. Believe it or not, he was once a struggling salesman who sold paper cups and milkshake machines and all sorts of stuff like that. Now, imagine selling a milkshake machine and then suddenly finding a single restaurant that needs not 1, not 2, but 8 of them. So curiosity would obviously come into play. So he decided to check out this anomaly. He flew across the country and discovered a booming fast food joint run by 2 brothers, and he was blown away by their efficient system. What would you do next? Well, he decided to franchise it and take it to a whole nother level. This man saw an opportunity to grow a small chain into a national chain and eventually a global phenomenon. To fuel this expansion, he borrowed against, that's right, his cash value of his whole life insurance policy. Why? Because it gave him fast access to the cash that he needed without the burdens and everything else that comes along with taking loans from traditional banks. He didn't want to deal with the repayment schedules. He didn't want to have everything set in stone because he didn't know if it was going to work. But he managed to cushion his company through the ups and downs of the economy by using, his whole life insurance policy. So who is it? For those of you that guessed, McDonald's, that's the chain, and Ray Kroc is the man. So carrying on this journey, mystery person number 5. Let's talk about a family that was deeply embedded in the American politics. And I'm not just talking about one generation. You see, this family has been at the forefront for decades, with members serving in various political roles, from senators to vice president and even president. Now, how does one fund the ever-demanding financial beast that a politician has to go through when they're doing their campaigns? That's right. Well, that would be through creative financing strategies, of course. You see, this family had the foresight to employ whole life insurance as the cornerstone of their financial planning. Matter of fact, they didn't even have any stocks. Whole life was what they used. So when it came time to generate funds for campaigns 1, 2, or 3, or other initiatives that they needed, what they would do is they would borrow against the cash value in their policy. This financial leverage wasn't just the fallback, it was a calculated move, giving them the freedom, the flexibility, and everything they needed to navigate the unpredictable waters of American politics without having to be beholden to external lenders, lobbyists, or the banks. Who is this person? If you said the Biden family, you are correct. For good, bad, or indifferent, that's who that one was. Let me pivot real quick. When we were searching all the people that maybe have used the infinite banking concept, you know that ChatGPT produced over 100 different famous people that use this. Let's get back into it. So mystery person number 6. In the financial world, this family's name is often mentioned in the same breath as the words banking dynasty. Originating from an era where banking was just gaining modern shape and just gaining popularity for that matter, they established a name that was synonymous with the American investment banking, not just traditional banking. But how did they secure and expand their wealth? You guessed it, whole life insurance was a part of their financial playbook. By consistently investing in whole life insurance policies, they had built in a safety net and a source of liquidity. So whenever they needed to make a quick financial move, buy up somebody, or gain market share, they had the money, so that acquisition or that investment was just as easy as borrowing the cash value of the policies. You see, this gave them an edge, a financial flexibility that helped them solidify their role as industry leaders. And not only that, like some of these other families that I mentioned, when one of these family members passed away, the next generation of dynasty bankers got a big windfall of money, and that is called death benefit. And almost all death benefit is passed on tax-free. Who was this family? If you said the Morgans, that's absolutely correct. And truly, the Morgans are a dynasty of bankers. All right, let's keep moving on. Mystery person number 7. So here's a family that might not be as high profile as the other ones that we've been talking about and the other ones on the list, but do not underestimate them. See, this family made significant strides in the financial services sector. That's a sector I'm very familiar with. They were competing in a volatile industry that requires ingenuity, foresight, and sometimes a bit of financial acrobatics. The family literally turned whole life insurance into a financial tool. They treated it not merely as a death benefit, but as a living asset. By borrowing against their policies, they managed to finance acquisitions. They also used it as an investment at key times when they were able to take advantage of things that other people couldn't because they didn't have liquidity. Thereby, they ensured that they stayed competitive. I like to say it's an elegant solution that minimizes risk and avoids the trappings of high interest rate loans or giving equity away, which no one wants to do. Who is this family? That's right, it's the Stanley family, folks. Morgan and Stanley. Now you're putting it together, they were bankers, but they ran their own private banking system. This one's one of my favorite. Mystery person number 8. Now let's talk about someone who didn't just create a business, but they literally created an entire universe of imagination and magic. So starting as a young artist with big dreams, this individual had quite a few speed bumps. So on the road to making his magical kingdom a reality, banks, well, they were a bit skeptical. Matter of fact, they said no. Investors, well, they were also hesitant. So where did he turn? On and on we go. You guessed it. His whole life insurance policy, not just the whole life policy, he actually used a New York Life whole life policy. This was not just a desperate move. It was a strategic one like the others. By borrowing against his policy, he was able to fund the construction of a magical land that would eventually become an empire of theme parks, movies, and so much more. Now, had he not been able to tap into this source of funding, the world seriously would have been deprived of some of its most beloved fairy tales, characters, and who are we talking about? That's right, Walt Disney. To wrap it up, we're going to talk about mystery person number 9. So this individual also comes from the financial background. He did not grow up in a family of entrepreneurs or bankers for that matter. He grew up in a lower middle class family. A middle class family where his mother allowed him to dream. And as he went on, he started a business at a very young age. He was about 16 years old and then went on to become a professional snowboarder. Now on that journey of having the professional snowboarding career and also the retail stores where they sold skateboard and snowboards, he also found his way into the Wall Street world. Now that wasn't strategic, it was actually literally because he fell flat on his face and he needed to get a job. And he landed in Wall Street, which there taught him all of the traditional financial needs and the traditional financial vehicles that he could use. But it wasn't until the mid-2000s when he met an individual by the name of Mike. Mike was a really well-known real estate investor who even had a TV show. And Mike was lending this individual some money. And one day they were meeting, and this individual asked this wealthy real estate tycoon, "How do you lend all this money?" And he said, "I lend from my private banking system." What was that private banking system? That's right, a whole life insurance policy. And what was the process in which Mike was using to lend money to this person? That's right, it was the infinite banking concept. This individual who was from the Wall Street world and from the entrepreneur world heard about this and instantly saw the light. Went on to become one of the foremost teachers of the infinite banking concept, taking what the late R. Nelson Nash wrote in his book, Becoming Your Own Banker, and bringing it to a whole new level and actually creating what would become an empire called BYOB, Become Your Own Bank. Who is this person we're talking about? That's right, Mr. Chris Naugle, the man teaching you this right now. You see, folks, every one of these individuals did one thing. They changed where their money went first. And they had a dream to do more, to be more, to give more. And that's exactly what I've done. And that's why I'm making this video. Now, these are just a few examples. The takeaway, whole life insurance is not just a safety net. It's not just a death benefit. It's a financial tool that has built empires and made dreams come true. I mean, think about those names. And hey, you don't have to be a millionaire to do this. I know plenty of folks earning between $50,000 and $100,000 a year who are using this strategy successfully. But you might be wondering, hold on, didn't R. Nelson Nash come up with the infinite banking concept? How could these historical figures have used it before it had a name, before it was even created? You know what? That's a really good observation, and one that I actually thought about. Now, it is true that the late R. Nelson Nash popularized the term the infinite banking concept with his book in the late 1980s, and the practice of leveraging a whole life insurance policy for financial gain predates him by a long shot. In fact, the concept of using whole life insurance policies as a financial instrument or as a private banking system has roots going back to the 16th century. Think about that. That's how old this is. The first recorded whole life insurance policy was issued in 1583. Over the centuries, many individuals and families have essentially used their whole life insurance policies as personal private banking systems. So while the catchy name, infinite banking, now it might be relatively new, but the underlying financial strategy has a very long history. So are you still skeptical? Well, no worries. I was there too. You see, I've created a special video to help you understand how this could work for you. But before you check it out, don't forget, this is one of the most important things. Don't forget right now to subscribe. And while you hit that subscribe button, you see right up above, there's a little bell. That's right, smash that bell so that you're notified every single time we put up a new video. And another thing, for those of you that are already on your infinite banking journey, do me a favor, drop a comment right now. Share your experience. Talk about a problem that this concept has solved for you. I gotta hear that. And if you're still on the fence, then that's fine. Click this video right here. See, I made this video to show people that can't get a whole life policy, like if they don't live in North America, how they can use the process called the infinite banking concept. So yes, you can do it without a whole life, but the whole life makes it so much more efficient. Check it out, and I'll catch you on the next one.